Big down day in the market. The Nasdaq is down 1.78% as of this very second. That is a big drop for today. Now, JP Morgan just announced their earnings and they killed it. And they're actually down, let's check this out, 5.7% today. That's incredible. Down $11 to $184. Now, banks have a different analysis, but it's just very interesting what is going on there with JP Morgan. Now, crypto, Bitcoin is down over 5%, which is kind of weird, guys, because I always heard that crypto was a hedge against tech and inflation, and I'm not understanding why this is happening with crypto. You guys know my opinion on crypto. If you want to trade it, if you want to do great things in the trading world with it, awesome. I just don't think it's a reliable asset, but more on that a little bit later. Market's down big. The VIX, which is the volatility index, which kind of called the fear index, is up big time today. It is currently up, let's check that out, 22.74%. Now, the historical average for VIX is 19, and it's currently sitting at 18.3. It's almost at its historical average, but it was getting as low as 12 just a few months back, which said there was a lot of complacency in the market. Now, guys, if you're seeing our channel for the first time, we have another main channel with 234,000 subscribers. But if you want to get market reaction news and reactions to companies, this is the channel to follow. Follow us here. I appreciate that very much. So let's check out some other big names that are falling today. Nike was falling just earlier this week. It's about even today, not bad. Starbucks hit a 52-week low. That's it today, 52-week low today of 84.37, as we see right here. Let me make this just a smidge bigger. 84.37. Okay. Again, guys, you should embrace down markets. If you're new to watching us on Everything Money in this channel, you've got to remember we embrace down markets. What we want to teach is you buy based on good fundamentals and you hold and make a lot of money based on riding out the emotions and watching those companies stake their fundamentals. If the stocks go down after you've determined the price you want to buy and it's below the price you want to buy and you purchase and it goes down further, you should view that as an opportunity. But keep in mind that the news will sit there and follow the stock price. Look at Amazon, for example. Let's pull up Amazon. Just back in November of 2022, December of 2022, it hit a low of $81 per share. It's now at $185. Back then, we're talking about fire the CEO, Jassy. They're talking about how their bets weren't working out. They need to start showing cash flow. Now, all of a sudden, here's how his bets are amazing. Here's why he's an amazing CEO. News follows the stock price at all times. What my goal is here is to teach you the fundamentals that you can make the determination of what the right price for you to buy. And once you've purchased, if the stock continues to fall, to reevaluate. Because guys, nothing is more stressful than watching a stock that you've bought fall without any other reason than just the news has changed on it. But my goal is that you sit there and use this channel and our community as a way of being around like-minded investors. Our community of like-minded investors sit here and talk about all these ideas day in and day out. And it's a great way to be around like-minded people. That way, when things do get stressful, you're able to pull away from the emotion and make the right fundamental decision. I don't want you to be alone. That's why I created this community. So guys, click the link below to learn more about the community and sign up for $7 for 7 days. And hurry and sign up because soon we're going to be instituting a wait list. So the sooner if you sign up now, you get in without the wait list. If you wait a little bit too long, we'll be instituting a wait list. So make sure you sign up and make sure you go in the general chat and tag me and say hi. Now, something else that's interesting. Gold has hit an all-time high of $24.50 just earlier today, but it's now pulled back to about $23.50. Quite the massive pullback from earlier this morning. But gold has been surprising. It was at $1,900 last year. It's just an interesting play considering everybody thinks whenever Bitcoiners try to attack any sort of like non-income generating asset, they sit there and criticize gold. I get it. And I don't invest in gold itself. I invest in an ETF that buys gold miners. And that doesn't mean you should go do that. But I've been in that since gold was around 1,800. I just believe that gold is a better hedge historically for inflation, and that's why I choose. And I have a very small amount of my money in there, just as a way of being exposed, because I do think gold miners were undervalued. But that's a big thing that's been getting a lot of attention in the markets, is gold and silver have really been skyrocketing a lot lately. Now, keep in mind, even though the Nasdaq is now down 1.82% today, it's still basically at the high it hit back in 2021 or early 2022 before it started its bear market that year. So Nasdaq is still quite frothy. Remember, as I always say, every investment is the present value of all future cash flow. Whatever you're going to buy, your investment return is going to be based on all those cash flows you get in the future, whether it's through dividends, whether it's through appreciation, whether it's through its combination of both, whether it's through reinvestment that drives the value higher. Your return is going to be based on that. And the less you pay, the better you will do, the higher your return. The more you pay, the worse you will do. That is a fact. As Morgan Housel says, every past bear market looks like an opportunity. Every future bear market is something to be feared. No, we believe every bear market is an opportunity, especially one in the future. If you loved Amazon at 185, you should have loved it at 84 and been loading up on it. But not a lot of people did that. Why? Because there's always a reason. Well, but Jassie's doing a bad job, yada, yada, yada. We see it all the time. Alibaba couldn't be touched at 300 plus. PayPal couldn't be touched at 300 plus. All those EV stocks couldn't be touched. Tesla, 414, this thing's going to the moon. Now the psychology has changed. Guys, this is a tweet I put out today about this article on MarketWatch, 2 articles on MarketWatch. Musk has 2 weeks to turn the ship around, says Tesla bull who is losing faith. Next one, Tesla's self-inflicted woes make this analyst feel more cautious about the stock. Guys, come on. Are you kidding me right now? That's ridiculous. When Tesla was at 414 a share, nothing could change its mind. Now all of a sudden it's at 160 to 170. Everybody hates it, even though since it was at 414 a share, revenue's up, profits up, everything about the company is better. It's just the perception has changed because the stock is down 60% or whatever. That is what I'm trying to teach. That is what I'm trying to have everybody understand. That just because a stock goes down does not mean the company itself is doing worse. Now, most times it does happen that way. But your job is to sit there and find those situations where it's just the market being irrational. That's what I want you to remember. In this time now, the Nasdaq is down to 1.87%. Russell is down over 2% today. 2%, guys. That's a big drop. The S&P is down 1.7%, the Dow 1.5%. Remember yesterday, the Nasdaq really rebounded. It was great. Now, another big reason for the stock falling today, the University of Michigan, go blue, reported a decline in U.S. consumer sentiment to 77.9, down from 79.4 the previous month, as concerns about inflation and a perceived stall inflation slowdown weighed on consumers' minds. Guys, just 4 months ago, people were talking about the Fed decreasing rates 6 or 7 times in 2024. Now, there's at least some sort of chance they actually raise rates this year. I think the bettors right now are making about a 3% chance. The whole point is this is proof that we have no idea what's going to happen any given month, any given week, any given year. What does matter is you find a fundamental process that makes sense for buying great companies. It's called a bottoms-up approach. You focus on buying great companies, focus on buying them at good prices, and let them run. And the emotional part of letting them run through thick and thin is very difficult. And again, that is why I created the community. This is so incredibly hard to do, but if you're able to do it, you're going to make so much money. Inflation is a worry, but I really commend Fed Chairman Powell and how he's done a great job of saying, I need to fight inflation. If that means having higher rates for longer and I go a little overboard, I'm fine with that. I think he's right. We have a strong labor market still sub 4% unemployment, which is not normal. We still have about normal historical interest rates. A lot of people have been spoiled by the last 10 years. Guys, interest rates for homes should be usually historically around 6.5%, 7.5%. This is actually quite normal. And that's okay. You know why also? It gives people who have extra cash around saying, hey, listen, I have extra cash. Let me get a guaranteed 6.5%, 7% return, pay down my mortgage. That's what you can do with that cash. Or you can stick it in a 90-day treasury making 5.4%. Higher rates are better for smarter investors. Higher rates are better for smarter businesses. Higher rates are better for everyone who is smart and doesn't need the perfect situation to make money. So please, if you're the kind of person who worries about the economy, you need to follow us, because that's not the thing to worry about. What you need to be worried about is buying great companies at good prices. There are a lot of great companies out there that are probably going to fall, that will fall in the next bear market. And guess what? We will have a bear market. What I'm trying to teach you here is how you can sit there and take advantage of the opportunities that a bear market provides. That you can be the person that 15 years later looks back and says, hey, remember that down market that everybody was scared about? I was buying during that. That's what you want. That's what I had in 08 and 09. My bankers told me you're the only good call we have because you're the only one enthusiastic about it. So come join me in that one. Click the link below. Join the community. Can't wait to see you there.